Thanks for listening to Rental Karma On Air, where good renters deserve good credit. Check us out at rentalkarma.com, and that's spelled Kharma.
Hey everybody, Cullen Canazares here. Today we're going to talk about authorized users and how that can help you with your credit. An authorized user is where a friend or a family member adds you onto one of their existing old credit card accounts. Why do I say old, and why is that important? Because what they're doing, when you get added as a user, you get to inherit all of the history that they have with their account. So if they've had that account for 5 or 10 years, all of a sudden you're going to have 5 or 10 years of age into your credit. This is really helpful for young people that haven't established credit yet. And it helps you get to that first step to maybe where you're going to get your first car loan and you don't end up in a bad situation. It's also very important that you do this with an old card with that friend or family member that they have, and one that they have very little usage, you carry pretty much no balance on. Because otherwise it can actually come back and hurt you. I'll talk about that in a second. Some people I've seen make the mistake that say their spouse actually just got a brand new credit card, and they'll actually go and add themselves to that card as an authorized user. The problem is you're doing this to a brand new account. And every time you open up a new account, there is a new account penalty, and your score will drop additionally. So it's really not a huge benefit to do it on a brand new account. It's best to try and find that friend or family member that has one that's 5, 10, 15 years old to get you that boost. Now, there are folks that have said to me over time, well, Colin, I just don't have anybody to do that. And I said, just talk to your friends, ask around. You might be surprised she can do it for you. But some people's like, well, I looked online and it says I can buy it. Buyer beware. Okay? The reason for this is not that you will receive the account showing up on your credit as an authorized user. But one, it is incredibly expensive. Some of these places charge $500 to $1,000 to do it. But the problem is they're doing this, and they only keep you on the account for like 3 months. So after 3 months, yes, you'll see your score jump up right away when you're added, but then 3 months later, they delete it and it goes off the report and your score goes back down. So it's really not serving any long-term purpose for that kind of money. I never have recommended anybody do it just because of those pitfalls. We can do it with a friend or family member. They can leave you on there forever, or at least until you're much older, further along in your journey of building good credit history and a lot of age in your credit report. So hopefully that helps. It's a really simple process. It doesn't cost the person doing this for you any money. It takes them literally 5 minutes on the credit card company's website, and you'll see the account show up on your report within 30 days. Sometimes even sooner. So best of luck, and hopefully that helps you to add a little age to your report if you're new to this process. Hey everybody, Cullen Canazares here, founder and CEO of Rental Karma. Today, we're going to talk about comparing different rent reporting services so that you can have a good understanding of what to expect from the different providers that are out there. All right? First, we're going to start off with the companies that started this industry 12 years ago. There's 2 of them, Rental Karma and Rent Reporters. The original CEO of Rent Reporters and I have been friends for over 12 years. We actually got this process going at the same time and got our approval from the first credit bureau way back in the day. Our companies actually have very similar business models in that we both do past reporting. You can rent from a family member. It really doesn't matter how you're paying your rent. There's a verification step there. And then there's an ongoing reporting part of the process. There's a little bit of difference in price between the companies. Ours is a little bit less, but we do also offer our one-on-one personal mentoring that helps people get 720 credit ready. We're a very human-powered business, so when you have a question, we're there to answer it for you. Since we started this many, many years ago, there have been other companies that have come into this space and are competitors to us in some fashion. Some of them claim to do the service for free. These new competitors have somewhat different business models. Most of them do not provide past reporting right up front. which is important because that's how you get that big jump in your credit score right away, because you're adding 5 or 10 years of history onto your report. And they only focus on the ongoing reporting. They do this because they're focused in sort of a technology solution. There's companies out there, you might have seen them, where they enable you to connect a bank account to their service, and they'll scrape your information and see things. You may have seen where they do that for like subscription management services to help you cancel subscriptions for something you don't need, like a streaming service or whatever. That same technology is used for these other companies for doing rent reporting. They log into your checking account and they look to see where your payments happen, et cetera. Well, what are the limitations of that? Well, one, to me, is you got to trust a third-party company having access to your checking account. That's a big hurdle to come over in the first place. 2, you have to pay your rent consistently out of that checking account for it to be reported. 3, it only can go back in time as far as it can see your rent payments in your checking account. And most banks don't go back that far through the basic electronic logging in process. You'd have to go in and download statements from years ago and things like that. And these technologies don't do that. So those are the limitations from that. So when you're comparing these companies to choose your rent reporting service, think about it from the perspective of what are your needs, and the timing of your needs are very important. If you're not planning on doing anything with your credit, like buying a house or a car for a year or two, I think all the services are an option. But if you're looking that you need something faster because you are in the market to buy a house 2-3 months from now, or needing a car loan or something along those lines, using your past history is an incredible benefit that helps you quickly add your rent to your credit report. As you might know or seen on Kharma, we add that rent to your credit report. It shows up in a couple of days. That's quick. And you see a much bigger increase because you got that past history. And the more past history you have, the better it turns out for you. Another thing that I get questions on, and our team do, is what if I use multiple rent reporting services? Bad idea. 1, credit bureaus do not allow it. And 2, let's think this through. Your credit score is not a mechanism just to approve you for, say, a home loan or a car loan. There's other things that go into the factors, right? How much money do you make? How much can you afford for your car payment? What is your debt to income ratio? If you had multiple rent reporting accounts showing up on your credit report, and say your rent's $2,000 and you had it on there twice, they go and pull your credit report for a car loan. It's going to look like you're paying $4,000 in rent, which might totally throw out the debt to income ratio and making it very difficult for you to get approved. I've seen this happen to people, and I say, oops, you made a mistake. And I said, you need to choose, because you need to close one of these accounts, because 1, the bureaus are going to delete one eventually. But 2, this is preventing you from reaching your goal. So keep that in mind. It is not the way to go about doing this in terms of building your credit. There are multiple other ways. One thing I also encourage people to do is make sure you go and read the reviews of the company you're going to choose. Okay? It is incredibly important. Credit itself can be frustrating. Make sure that you're working with a company that's going to be able to support you when you need them. So go read the reviews, read the good ones and read the bad ones. And also, I tell people a lot of times, read the percentage of reviews. A lot of times they'll show you 90% of the reviews of the company are 5 stars, right? 3% are 1 stars. Some of the companies in our space literally have 20 and 30% of their reviews are 1 star. And you read those reviews, it's people that are frustrated. They can't get a hold of somebody, can't get a hold of a human. They don't know the status of things. So make sure you go and do that research before you choose the company you want to work with. Visit the Real Kharma Learning Center. You'll see all the red flags, all the things that you can do to positively get yourself to where you need to go. I tell people the Real Kharma Learning Center is like driver's ed for credit education. You go there, you won't run any stoplights, and you will learn how to say 720 credit rate. Hey everybody, Cullen Canazares here. Today we're going to talk about the closed account penalty. What is that? Well, credit is a weird thing. We weren't taught it in school. The folks that did the formula give us some pretty broad, vague direction on what goes on with your credit report. When you go and look at things, you find that there's some devil in the details, okay? And it's kind of painful in some of these situations. Hey, I've been doing this for many, many years, and it took me a few years to even learn what this closed account penalty was really. It happened to me when I went to the car dealership. I had just happened to pay off my car, and I had like a 715 credit score at the time. And I thought, hey, 5 years of payments, my credit score is probably going to go up to 740 now. That's pretty good. No, wrong. I didn't get a birthday cake. I didn't get a present, or I got nothing for paying off my car loan other than the title to the car. But what happened in the world of credit is that this was an open account that had been paying every month on time. As soon as I paid that last payment, they marked the account as closed because it had a zero balance. But the problem is 5 years of payment history now just went away off of my credit. So my credit score actually ended up going down like 35 points. It's like, what in the heck is going on here? So with a car loan or any kind of loan, like a personal loan or whatever, an installment loan, it's an unavoidable occurrence that's going to happen eventually once the thing gets paid. But it's important for you to look at that from a timing perspective. Maybe you're about to buy a house in 4 months, but you only have 3 months left on your car payment. You could get a really ugly surprise right there at the end of going house shopping if your score drops from 700 to 660 just because you paid off your car loan, and now it makes it more expensive or impossible for you to even buy that home, right? So it's very important to keep an eye on that. And when it comes to closing accounts, I tell people, a good number of open accounts to have in a credit report is 4 or 5. You don't need 10. All these extra ones you have actually it's more of a risk than anything, because you have more things you have to keep an eye on. You got to make sure that there's not an accidental missed payment on a store credit card or something along those lines, because those things can take you back, because you'll learn all that stuff in the learning center. Make sure you keep yourself 720 credit ready. Okay. When I say 4 or 5 open accounts is a good thing to have in a credit report, maybe you have a car loan, maybe there's a student loan, your rent or a mortgage, and you need to have 1 credit card. You'll get the info on that in the learning center to make sure you understand how to use it. You don't need 5 or 10 credit cards. Okay. But make sure that you keep these accounts that you do have open as long as you can with, for example, a credit card. That's one of the big ones. If you can have a credit card that's 5, 10, 15 years old, that helps really boost your average age. It's hard to keep a car loan 15 years because you pay them off, after 5 or 6 years. Your rent, it can be pretty old if you've been in the same place for a long time. A lot of people, they move around every few years if that's the case. But once you do get your mortgage, obviously that'll get over time. One mistake I do see with these with accounts is where people have multiple new accounts on their credit report in the spirit of, I'm going to build my credit. And they open up 2 or 3 or 4 sometimes of these accounts with different credit building services. And I find this when we do a review with them, and I go, why did you do that? And I know the answer is going to be, well, I'm trying to build my credit. Oh, that's good spirit, right? The problem is that these multiple open accounts at the same time show up all as new accounts. And that'll actually drop your score 10, 15, 20 points per account. It takes a while to rebound from that. And I instruct people, I say, you know what? You need to go close 3 or all 4 of those accounts, depending on if they even needed to even have one of them. And a lot of times they didn't. People would ask me, well, I've read that closing accounts will hurt my credit, Colin. And I say, yes, if it's 5 years old, 10 years old, or something like that. But when it's only 1 month old, it's like a little baby. I mean, it's brand new. It is not going to be hurting you, because all you're doing is taking 1 green check mark away from the credit report, as opposed to 60 when it's a 5-year-old account. It's just basic math. I tell folks, really, credit is about 4th grade math. It is not difficult at all. You just have to know how it works. And as soon as you have that understanding, you'll be in great shape and you won't make the mistakes. So get yourself to the Wrong Kharma Learning Center, read the red flags. It's just like driver's ed for credit education. You do that, you'll learn how to stay 720 credit ready, and you will not go backwards.
Thanks again for joining us for another episode of Rental Kharma on Air. Be sure to leave us a voice note for any questions, comments, or stories about this or any other topic. send them over to Cullen@rentalkarma.com. Also, don't forget to like and subscribe the Rental Karma channel here on YouTube. Just hit that button below, and we look forward to hearing from you next week.